Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us, broadcasting to you live from the Dallas KFXR 1190 AM Clear Channel Studios, broadcasting also through the iHeart app and yorbamedia.com. All right, I'm joined by Buck French, CEO of Fantex, one of the most unique ways to take a cash flow and turn it into a publicly traded stock. This is some amazing stuff. All right, Bud, you are not only working in the sports arena, the professional sports arena, but you're also delving into the world of entertainment. That's got to be cool.
Yeah, so we're absolutely, a goal of ours is beyond just sports, is to enter into the entertainment sector, work with musicians and actors, and it's certainly an interesting sector to focus on.
Yeah. Now, how do you pick out? I would imagine that the lifespan of a film or a television or a musical star could be longer than a pro athlete, because they're not quite as subject to some of the same risks.
Absolutely. Each sector, whether it's football versus golf or baseball versus music or acting, each has its own unique kind of positives and negatives associated with it.
Right.
Certainly in the music side of the equation, for example, you could be, if successful, could be paid royalties for in perpetuity, versus an athlete that obviously has a shorter career span. All of them have different risks based on competitiveness and their own capabilities, if you will.
Let's circle back, if I can, just a little bit on the valuation. How are these brands, because now they've moved from just being humans into a brand, a product that is valued. How do you determine the valuation so that, I mean, obviously the market determines the share price, but how do you determine the initial valuation on what you should come out with?
Sure. Great question. So we look at, depending on the sector, but let's take football, for example, determining the valuation. So what makes up brand income is their current and future NFL playing contracts,
Mm-hmm.
their endorsements, appearance fees, and importantly, their post-career. So should they go into broadcasting or TV or what have you. So the first key component then is to look at what's the estimate on how long the player is going to play. And so we have a quant team that basically builds out an econometric model to understand and look, like in the case of Vernon Davis, we looked at all tight ends that were drafted and retired between 1990 and 2010. And that yielded 212 players. We then looked at what criteria were statistically relevant to career length. There were 6 elements, things like statistical production, durability, injury history, things of that nature. And that model, when you plugged Vernon's data into it, yielded our estimate that he would play approximately 14 years. And then once you know how long he's going to play, then you can again look at that data set and look at comps that got contracts in the same time frame that Vernon Davis would be looking at contracts. And ultimately, all of that, coupled with our estimates on his endorsement income based on his historical and his future prospects, that yielded our $62 million estimate for his brand income.
What about if the athlete, and I'll stay on the athletes right now because I'm sure valuations have just slight tweak for some of the other industry sectors you work with. What if they get injured or they retire? I mean, how do you work with that?
So, one, if a player voluntarily retires within 2 years, we have a clawback, so we can get the money back. Otherwise, ultimately, it's their decision. They're, in the case of, say, Vernon Davis, he obviously still owns 90% of the brand income. We're only acquiring 10%, so he's motivated to continue to perform and generate income. From an injury standpoint, a catastrophic career-ending injury absolutely is a risk, but it's not the common component. What you find with injury is the wear and tear of being a player in any sport ultimately impacts your career length. So we account or adjust for that, one, based on how we derive our estimates. So injury history is a key criteria that drives our model. And then the other way we account for it is based on the discount rates we apply to the cash flow stream. So when you look at, again, for the Vernon Davis offering example, the weighted average discount rate was 11.4%. If you look at a CCC rated junk bond, the yield on that is less than 8.5% today, with about a 27.5% first-year default rate. So we felt, that was a good compensation for the risk of, associated with the cash flow streams.
The way this is set up, the dividends, do you see that that's going to be a regular byproduct of what you're doing?
Yeah, absolutely. We see paying a dividend as a core component of creating that linkage to the investor. And it's what we think makes the security interesting is, it has this dividend yield component potential associated with it. And at the same time, the upside in the post-career side, should they, become a Michael Strahan or what have you. So that kind of, when we look and talk to investors about the security, it's this return of capital potential on the playing career, coupled with then having this call option on does he play longer, does he end up being a broadcaster or what have you. That's ultimately, we think, drives our desire to pay out dividends.
When you go on a road show with this, because this has got to be something brand new for most of the people, they sit in the room, they look, they yawn, they move on.
Yep.
This has got to be a different road show when you go on. Bring that out. What kind of interaction, what kind of feedback are you getting as you do the road shows with these athletes?
Yeah, so it's definitely a different road show because we're not institutional investors are welcome to participate, but it's not our target. It's really the retail investor. So when we kicked off the Vernon Davis Roadshow, we got the old John Madden cruiser that, he never got in an airplane. He used to drive around in a tour bus. Uh-huh. And we went to 13 cities in 13 days, about 5,000 miles, and we invited anyone who wanted to come down to a local venue, and depending on the city we were in, and we would get anywhere from, 20 to 50, 60 people, and we would go through your traditional roadshow presentation. I would gather and guess that the vast majority of which had never been to a roadshow presentation. And it was fascinating, whether it was a professional investor to the fan. They all wanted to know, how do I make money? So it was a lot of fun. When
you come into Dallas, there's a big sports down here. I mean, a tornado will come on the air, and the sports announcer will get upset because they cut away from his thing. So big time down here with the sports. When you come into Dallas,
you know what? That's a great point because during the Vernon Davis offering, we actually couldn't sell. We hadn't passed through and gotten registered in the state of Texas. We actually just got that a couple of weeks ago, so I'm due a trip through Dallas and do a Texas swing, and I'll definitely let you know. We'll put that on the books.
Yeah, you got to bring your athletes on the show. We'll talk about what's going on next. All right, Buck, we got to go. We're short on time with you, but I want to thank you so much for coming on to the show. I really appreciate it.
Yep, enjoyed it. Thanks, Michael. Have a great day.
Yeah, you too. All right, Fantex, Fantex.com. Go there, check it out. Special thanks to 1-800-PublicRelations.com for all their PR, media, and audience development support for bringing Fantex to the show. I want to thank everybody for participating with us. Please, you have all helped us drive new all-time highs in listenership. If there's something that we're not doing you'd like to know about, be my guest. Contact us at yorbamedia.com and let us know who's doing good for you so that we can do good for you. Good luck, good trading. We're going to be back again at 2 o'clock with market updates and our regular cast of what's going to happen next with the market. Talk to you then. Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. Broadcasting to you live from the Dallas KFXR 1190 AM Clear Channel Studios and the iHeart app, as well as yorbamedia.com. All right, we have Buck French, CEO and co-founder of Fantex. And this is one of the most interesting publicly traded processes I've ever heard about. The exclusive brokerage for stock linked to a pro athlete's brand. Amazing, Buck. Great idea. Welcome to the show.
Thanks for having us, Michael. Appreciate it.
My pleasure. Give us a little background on you, and I want to get right into Fantex and what you do and how you do it.
Yeah, sure. I graduated from West Point, Harvard Business School, and have founded several successful technology companies out in San Francisco. And Fantex is our latest project that we're extremely excited about.
All right. What does Fantex do?
So we acquire a minority interest in the future cash flow stream of a professional athlete, for example, Pro Bowl tight end Vernon Davis. And we turn that into a registered security with the SEC, which we offer via our broker-dealer, Fantex.com. So people go to Fantex.com, can actually trade shares that are linked to the underlying cash flow of Vernon Davis.
All right. This is a very interesting process. A lot of ups and downs, I would think. Tell me how you keep that together so that the investors who are buying the stock see an appreciation, because I know there's a lot of downsides that have to be addressed, because nobody wants to buy a stock and watch it go through the floor. You've got to have something that you put together for that.
Sure. So fundamentally, what we do is a detailed analysis on how long the player can play. Mm-hmm. We forecast out their gross cash flow streams, and then we do straightforward discounted cash flow analysis to bring it back into present value terms to adjust for risk. So
right.
In the case of Vernon Davis, we forecasted he had the potential to make approximately $62 million. And we adjusted that. The weighted average discount rate across all the cash flow streams was 11.4%. So that gave us a $40 million valuation today. And so we acquired that 10% interest in his future cash flow for $4 million. So built in, based on our estimates, we build in a return for the investor.
Wow. Okay. All right. He's got a symbol now, right?
Yep. VNDSL.
All right. Victor, Nancy, David, salary, liquid, right?
Yep. That's it.
Okay. All right. Now, what about this business with Dave Burney?
Dave Byrne. Yep. So my fellow co-founder, Dave Byrne, he's the chairman of the company. He was one of the founding 5 partners at Benchmark Capital, which is, by anyone's estimation, a top 1 or 2 Silicon Valley venture firms. Been very successful. They've funded some of the top firms in Silicon Valley, eBay, Twitter, companies such as that.
Okay, all right. And tell me about his part. I want to hear the moving parts of Fantex, because that's what people are investing in, not just these pro athletes. Your ability to actually drive revenues, drive profits into all of these these publicly traded companies and the athletes that you're working with.
Yeah, so Dave's obviously a key component, chairman of the company, is actively involved with helping us recruit athletes, and then our brand management function is really about helping broaden the perspective of the athlete beyond just being a professional athlete, because by nature that brand will eventually die because they won't be an athlete forever. Mm-hmm. So we bring out other elements of the individual that makes it more of a sustainable brand. And so we use those to help develop an analytics package that allows us to understand the social media footprint and who the audience is, so that we can, over time, migrate that to a sustainable audience by the time they retire. That's our goal.
Okay. The market share and the market size, talk to us about that.
Yeah, so, if you think about, there's approximately 3,000 plus professional athletes just in the United States. That turns over about 20% a year. You're looking at an overall marketplace that's in the billions, and our goal is to capture a percentage of that cash flow stream, mm-hmm. And then help the athletes enhance and enrich it so that they can generate cash flow for longer. So we think that there's a great opportunity to work with not just football players, but across the world of sport.
How about the outside the borders of the United States? Have you penetrated any of that market? Because the World Cup, it's huge. It's huge.
Sure. Yeah, if you throw soccer in or football as they call it, it's a even larger market. No, we're currently focused just on the United States right now. Get the marketplace up and running at Fantex.com, and then we'll ultimately definitely look outside the U.S. borders, and soccer is a natural one for us to target.
It is. The internals of your company, and we've got a couple of minutes left in this site because everybody wants to know about this. Future plans, the internals of your company, and how it's going with getting these pro athletes to sign up with you and go through this process. I'm sure at worst it's a massive ego boost. Hey, I'm a publicly traded brand. You know what I mean?
I would gather that's no different than any CEO of a public company. The same thing. It's going very well. We're excited to be working with Vernon Davis. We're currently open. We're on the road show for Fantex EJ Manuel, so the starting quarterback for the Buffalo Bills. People can actually go to Fantex.com today and reserve shares in his IPO. We also filed a registration statement for Mohamed Sanu, wide receiver for the Cincinnati Bengals. So we continue to make great progress in building a pipeline and signing professional athletes. And, we are excited that after we close the Vernon Davis transaction, and that stock is now trading in the secondary market, about 30 days after we closed the transaction, we announced a 70-cent per share dividend for holders of Fantex Vernon Davis. So we are signing the athletes, collecting the brand income that we acquire, and distributing a portion of that out as a dividend to the shareholders.
God, I just had a thought. The fans of these athletes have got to be, they've got to have it. You know what I mean? They buy all the memorabilia. Why not own the stock?
Why not own some of the stock that's linked to it? Exactly. And, interesting, the fan is definitely participating, and so are, your traditional investors, because at the end of the day, it's an interesting asset class that's linked to that true cash flow stream. And so, we have a maximum purchase amount of 5% of an offering. And so, we had people buy the minimum, which was one share, and we had people buy the maximum, which was, a couple $100,000. So it's an interesting investment that also has this fun fan element associated with it.
I can see that. I mean, have you ever thought about going into like NASCAR? I mean, those fans are absolutely crazy about their memorabilia and such.
The NASCAR is definitely a target we would consider. Right now we're focusing on the major sports that are aligned with fantasy sports because it has that natural segue. But absolutely, NASCAR is something we would look at in the future.
Now, these athletes, when they come in and they go through the registration process to become a publicly traded brand on their own name, they are also participants in the stock. I take it.
No, they're not.
Is there a regulation that says no, you can't do that?
Correct, because otherwise they'd be a promoter of the security and or a co-issuer. So what we do is we sign the contract with the athlete to acquire that future cash flow stream, and then the contract that we sign with the athlete becomes the basis for the security. So they are not allowed by SEC rules to participate in the offering process. They can talk about why they did Fantex 40 days after the transaction closes. So a couple weeks ago, Vernon Davis, was able to finally talk why he did Fantex, and he was down on the stock exchange with being interviewed in other places, and so we, other than that, though, the athlete can't participate.
Got it. All right, well, let's take a break right now. But before we go, please contact information so all the fans of what you're doing can see and know better what we just spoke about.
Yeah, for those who are interested, you can go to Fantex.com. It's Fantex.com, and actually check it out and participate if interested.
All right, we'll be right back with Buck French, CEO of Fantex.com, and special thanks to 1-800-PublicRelations.com for all their PR, media, and audience development support. We'll be right back.